Starting with the 10-year yields here on the weekly chart, just to get a bit of perspective, we've got 1 and 2 here, and then we've got 1, 2, 3, 4, 5 up for the third wave. We've been toying with this fourth wave here. It can pull back to the fourth wave of one lesser degree. We could also place this wave 4 just under here as an ABC pattern here, and we've just been toying with this little bit over here to see what type of pattern that could be, because otherwise we get 1 and 2 and 3, 4, 5 back down into this space here. On the long shot, it's possible to have this wave 3 up here as a wave C, and that's over, and we just continue to move to the downside at that point. That's also a possibility as well. If we move from the weekly to the daily here and take a closer look at this, where we were last time, we were looking at as well wave 3 here, an A and a B, and possibly we could put wave C over here as wave 4, but we're also and move up from this point. But we didn't really see a nice impulse wave in this first leg here. It's more like it's in 3 waves. But then again, if this is going to be down for 1, back for 2 here, down for 3, back for 4, and down for 5 here, then the A wave really should be in 5 waves as well, because it's wave 1 here and 2 here. So it should be a zigzag. It should be a 5, 3, 5 structure. So I'm not going to put too much weight on that. Now, this situation here, we spoke last time, we're looking for 1 and 2, and now we're starting to see the third wave push up here for wave C. So I will have to wait for wave C to finish, and even when it finishes, it's going to correct. Even as a bullish or bearish pattern, it will correct after 5 waves. So it's not until we get way over here that I will be able to understand if we're going down or we're going up at that point. When we drill in here and have a closer look at this from the daily chart to the hourly chart here, we can sort of get a bit better understanding of it. We can put wave 4 on this low, as you mentioned. It does count more like 3 waves up here, but you probably get 5 waves out of it. Very clear that it's got 3 here. So the A wave, the B wave, and the C wave here. With the C wave here, we're looking for 5 waves of 1 and 2. We've watched it creep up nicely here. We should see it push up further as we see the US dollar push up. When this tops here, then we should see the US dollar top, and then we can see this come down at that point, So with the US dollar, in a rally, we can see this is the US dollar here, the Dixie here. So we're looking at it, there's a couple of different ways to look at the bigger picture, but in a nutshell, I'm looking for it to be 1 and 2 here, and then blue 3, blue 4, and blue 5 for C of 2. And that would be the end of it at that point. Then we come down deeper at that point. We'll see the yields come down at that point as well. But in the meantime, we're seeing the yields push up, we're seeing the dollar push up. So in understanding where we are within the structure, we're just past the halfway mark, because we've got wave 1 and 2, and they've got 1 and 2 here. Now I need to point out that normally in an impulse wave, we would have wave 2s being simple and sharp, and wave 4s being sideways and complex. Here, these two here, green 4 and blue 4, being sideways and complex and burning up a lot of time. But I don't think that's going to be the case. I think these two are going to be quite simple in relationship to their partners over here for that. So from blue wave 2, we've got 1 and 2. We're going up for 3 here, and we've got wave 1 already and wave 2, quite complex really, into the size of it in relationship to wave 1. So wave 2 here, we've got to wave 3 here. We're kind of up here in 2/3 of the way through. We've got wave 1 and 2, 1, 2, 3, 4, 5, or 1, 2, 3, 4. So we're getting up to 3rd, 4th, 5 up here. So there will be a larger correction at the 103. I expect the 103 correction to be bigger than the 102. And this is basically where we are here. So 3, 4, 5 for the 3rd, the 4th, and the 5th. Now, obviously, will affect the yields. It will affect gold and silver and the euro dollar and the sterling and commodities as well. And we're seeing that play out. We're seeing weaker, we've been seeing weaker nickel for a long time. We've been seeing softer iron ore, and we're seeing iron ore push down low. I must have that I mean copper, so I must have that in another chart here, but I've got gold here, so I'll just do this. So with gold here, we're looking at wave one being over here. When I look at stocks, I still feel stocks could have wave one here or still over here for this as well. So I'm a little bit in two minds, but one of the obvious things is that we're seeing the dollar push up. So we should see this, you know, move on down in the same, they should top and turn at the same time. So between when this has a low here, we'll see the US dollar have a top at that point. So, you know, maybe we could have wave one here and look at this as an A and a B and a C coming down here and those sort of things, you know. But it doesn't matter. This will bottom out when the dollar tops out. Okay, so we're in the same timing of events, in the same structure, so that's there, and we should also be able to tie silver into that as well. So I've got silver here a little bit short on time here, so we'll just see how wave fours go and how things sort of play out here. But I'm thinking this might stall in terms of time, why gold and the US dollar actually cover a bit more ground, but we're definitely not down here yet, and we don't have to get sort of too particular about it. We're in fours and fives. Just let it unfold. It's going to be complicated. Don't let it suck the energy out of you at this point. And this is copper here, so I wanted to get copper first, but there we are. So copper is moving down, and we should see it, you know, basically wave threes normally occur at the low, so wave four here and wave five. So that's where we are with this situation. The levels between 30 and 40, between 3 and 4 here, we've got 1, 2, and 3, which is group 1, 5 the midpoint, and then 8. When we talk about 8, we talk about group 2, so 3720 and 36,500. So if I was going to short this, I'd be looking for 36,565 number tucked in there as the retested resistance, and just keeping the stop out of the way. So yeah, I don't see any problems with this. But when you're covering old ground, see how this moved quite quickly with a few things in here. This is going to repeat it over here, but when it gets down here, this is going to mirror something like this over here. So just be, yeah, there's market memory, as they say. But that's copper, and nickel's the same as well. We'll see nickel land down here somewhere. We'll see wave 4 and wave 5. I still want it to make a low below here though, so I may need to readjust this here. I've got wave 1 and 2 here. Yeah, I might need to push this wave 2 over here, and then push this wave 1 here and this wave 2 here to extend it out a little bit further. Anyway, I'll give that some thought. It's not a big deal at the moment, but it's still, as I mentioned before, it's still to the downside. We'll need to look at lithium as well. We looked at lithium this morning, so I won't go into a big spin about that, but I will just go up here and just want to check how China's opening. Oh, it's not open yet, is it? So I can have a look at the daisy. I'll just have a look at lithium here and see how Australia will be. Probably a mixed bunch of things happening. So we can see Liontown. We know that that's reacting from the 3 here. That's just normal. That's why you always get out of the level, by the way, or take something. PLS, just have a little look at that here. That's okay. We looked at that this morning. We're looking at this as a little wave 4 here. I won't bring in that, but yeah, I was more interested in these two up here. A bit softer in these guys. Yeah, it's just these ones here that I'm looking at. China's not quite open just yet, but we should see this push up here. I'm just seeing to see if there's 5 waves in this move to the upside here. That's our thing. We'll wait for 5 waves to move up, then the ABC, and then we go, because it might just have 5 waves up here and then collapse again. You know, it might be this might be some part of some correction with an A and a B and a C wave up here and then down again. So there's a fair bit to do here, but I think there's a good chance of having a bit of a low in place here. But yeah. We'll see, because it's kind of been doing its own thing a bit you know, compared to the other markets. Okay, anyway, with the crude oil here, there's a couple of ways we need to look at it. It's it's a very clean wave 1, 2 here, and a clean 1, 2, 1, 2, 3, 4, 5 for third wave, fourth, fifth. So it's a very clean third, fourth, fifth wave here, you know. So we can look at it as wave 1 or wave A. I'm tending to look at it more as wave A because as a wave 2 to pull back, it's really quite big. And then we also may come down here as well, you know, because I count this as 5 waves here as well. I count it as corrective, but I can also count it as 5. So it's an open story at this point. It looks a bit like 5 waves up here, so you can go long above that top. That's one thing. Otherwise, the market will drop down here, and then we have to wait for another classic trading level pattern over here. And at the same time, when it drops down here, we'll need to be careful on that retest here. If this is up in 3 waves here, we'll be looking to put a short trade in here and then up in here on the B wave here. So we'll just let it fall into play at this point. There's no significant dramas at this point, but you know, we need to be mindful that you know, could I look at this in some sort of ABC pattern here? I could probably do that, but just such a nice 5-wave structure. So let's just see how it goes. Yeah, and the other thing we have to be careful of here is even if this trade gets triggered here, yeah, it could like go to the moon or whatever, but we have to be careful of 1 and 2 in here, and 3 will come in across the top here, somewhere 4 and 5. That will bring us into the 61.8% mark here. So this is where the A, the B, and the C wave comes in for wave 2 over here. So we can only trade it up into the 7.4 or 7.5 here, and then exit and wait at that point. So not the best looking setup, but you know, we can dance. Natural gas. So as you may know, we've been looking from the low here, we've been looking at this as wave 1 here, and then coming back for wave 2, a bit flimsy. And the other point here too is that we've been looking, I think I've last time we spoke with this, I was on the Australian video, I had this green wave 1 sitting here and green wave 2 here, but I've just expanded it up a little bit. But it still doesn't make any difference, is that when we get to this 5 waves here of 1, 2, 3, 4, and 5 here, right, we'll take some money off the table. We talked about that, it was under there, but I'm just giving it some clarity there. So yeah, I have to leave the stop out of the way. You can take it all off, take part of it, take some at the top here if you want to. I have to wait for this ABC pattern, and this is where we go long again over here. Now I could go down to here and we could do, you know, something in here and all of this sort of stuff here, but that B wave will be our initial catalyst to go higher, because what we need to understand is that we could have this as the A wave here, the B wave here, and 5 waves up for the C wave here, and then come down at that point. So we don't want to be overloaded, you know, at the wrong time with this, you know. That's the risk at this particular point in time. So we don't want to be caught out here. So what we've done is we're taking some money off the table here, and you can take some further up here, take a fair bit off. It can pull back to the 50-60%. We'll keep a bit of an eye on all of that. We've got the stop pretty much out the way already with this, but we might need to adjust that a little bit depending on the height and all those sort of things. So yeah, I mean, if it's going to be bullish, then we'll move past this, you know, A, B, and C here, you know. I mean, I'll just put these in here just to remind us that, you know, this is an obstacle, a hurdle that we need to move past, and there's nothing we can do about it. We need the market to confirm it by taking that B wave out here. So we're going to lighten the load here, and then we can move back in and go off again, you know. It's just dodging the coppers on the way back from the pub, so to speak, the younger days, you know. Okay, so that's that. And do we cover else natural gas? Yeah, just that, and that. Okay, I'll just leave it at that. We're kind of covering a lot of this in the Australian video, but as I mentioning when we do the new website, we will do a commodity video every day, but it will be a reasonably short one. And the Australian video will go, and some of those things will go into the commodity section, and some will go into the indices section, and I want to focus more on trade. So I need trades for the US and trades for Australia, and I need to make time for that. I need to sort of be with the market, and my way of doing that is having a watch list and actually flicking through the stocks really quite quickly. I'm quite good at that. I used to do a lot of it, and we'll be looking for trends that sometimes you get sort of stopped out within a day or two, and other times, some of them will run, that type of thing, and hopefully we can hold on to some of those trades. I mean, the normal thing is that, if you're reasonable at finding setup patterns, then let's just say that out of the 10 trades, you get 5 right and 5 wrong. The 5 that you get wrong, if you're risking 1%, that would be of your total capital, that would be a 5% loss. The other 5 winning trades, they're not all going to be spectacular. 2 of the 3 of them are going to be break even, make a little bit of money, and hopefully 2 of them out of those 10 trades will run. So it will be the 80-20 principle rule that, you'll make 80% of your money out of 20% of your trades. So we should be able to get, for at least from 5 to 7 trades correct out of the 10. That's what we'll be sort of looking at. But you still need money management in place for those sort of things. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.